Notice how
All
the
right.
days are getting shorter now?
Good morning, everybody. Good morning, SRES Networking Meetup Group. Thank you for everybody for being here. I'm so excited today. We're going to learn something new with our affiliate colleague, David Butler from Butler Loans and Butler Home Loans. So, David, I've made you co-host. You can go ahead and share slides and you can get started.
Okay, let me get going. Share. Hey, everybody. My name is David Butler. I am from Butler Home Loans, as she said. Hold on. Let me get this. There we go. Slideshow. Let me get this going. All right. So as Julie said, I'm David Butler from Butler Home Loans. I'll give you a little history here. Today, we're going to talk about reverse second mortgages. So when I joined, they said, is there anything that you know that maybe we haven't heard of yet? And I didn't think there was, but apparently there was. I'll give you a little bit of my history. Again, I'm at Butler Home Loans. I am a DBA. My parent company is GMCC, or General Mortgage Capital Corporation. They're here in California, but they're licensed in 49 states. I am not. I'm only doing California, but the information I'm going to give you is for other states as well. This just gives you a little history of who I am and why I'm speaking and you're not, maybe. I started as a licensed mortgage loan officer in 1989 in San Carlos, California. So it's been a few years.
Everybody, please mute themselves.
The last 5 years before I worked at GMCC, I was at High Tech Lending. High Tech Lending is in the top 10 in the nation in reverse mortgage loans. So I learned really at a great company how to do reverse mortgage. I've been with GMCC for the last 2 years. All right. So the first question I want to answer today is, what is a reverse mortgage second? So whoever is 916397, there you go. Thank you. So reverse mortgage second, what is it? So it's not any different than a first. It's really just a second mortgage. So a reverse mortgage, I'm not going to read all my slides, but some of them here. A reverse mortgage second is a loan that allows homeowners age 55 and older to access a portion of their home equity without the addition of a new monthly mortgage payment and without having to pay off their existing first mortgage. And that's the key that makes it different than a regular or first mortgage loan. There's some other differences that we're going to get into as well. But the biggest thing is, if you've got a client that says, I got a 3%, I got a 2.5% first mortgage, I just don't want to get rid of it, they don't have to. Okay. This loan is not available in all states. I'm going to get to that in a bit. And in some states, the minimum age is higher, like in Texas, it's 62. Okay. Reverse second is a new product. The reverse second is only offered by one reverse mortgage company. Now, when I say that, this is who you're going to get it from ultimately. I can do reverse seconds. Most any reverse mortgage lender you work with can probably do a reverse mortgage second, but the financing is being offered by Finance America Reverse, and they call the product the Home Safe Second. So that's where it's coming from. To give you an idea of how new it was only introduced a little bit more than a year ago. It was introduced at the beginning of 2024, and so far, none of the other reverse mortgage lenders are offering a second. FAR is the only one. Okay. All right. How it works. Number one, you can keep your current low first interest rate mortgage. If that's what they've got and that's their hurdle that they can't get over, that's fine. This loan is non-recourse. So if they get a reverse mortgage second, the non-recourse means that the lender can only ever get the house. Let's say values dropped, plummeted, and there was no equity in the home. They can only get the house. They can't go after the heirs or after anybody for other equity. It's a non-recourse loan. To get this loan, you have to show you have enough income to qualify for your current mortgage payment, principal, interest, taxes, and insurance, and homeowners association, and have money left over for food. So it's the same qualification you have when you get a first reverse. The catch is you also have to qualify for your current mortgage payment. So it is going to require them to have a higher income to be able to get this loan. If they don't have the income to get You get the idea. So, whereas if they got a reverse first mortgage, they just have to have enough income to pay taxes and insurance and food. They wouldn't have to worry about a mortgage payment on top of it. Okay. On this, there is no monthly mortgage payment required on this loan. So while they can continue to pay on their first mortgage, they don't have to pay on this mortgage, although they can. It's not required, but it is an option for them. This loan is what I call one and done. Okay, it's not a line of credit. They're going to get however much money the bank is going to lend them all at once, and they can put it into their account and they're done. It's a fixed rate mortgage. It's not adjustable. So there is no line of credit associated with it. You're going to get all your money at once, and I will show you what that looks like. Number 6, all the standard rules apply for having a reverse mortgage. So just like here, it says, i.e., it must be your primary residence. You got to get counseling. You have to pay the property taxes and insurance. You have to maintain the home. All the normal stuff for reverse mortgage apply on top of what you're doing here. Next one, what can this loan be used for? Really almost anything, but to give you some ideas, you can use it to pay off higher interest rate credit card debt. Maybe they're fine. Like I said, maybe they love the loan they have, but they've gotten themselves into trouble with credit card debt. You can buy an investment property or second home. For you real estate agents out there, this is a great opportunity for them to buy a home, maybe an investment or second home near their children. And this can help do that, especially if you're in an area where homes have a high cost. They can use it to build an ADU. That's a huge thing in California. You guys will have to tell me about your other states. I'm not sure about them, but ADUs are huge in California. Everybody wants to build a second home in their backyard. Cover rising gas and grocery store prices. You've all seen what the inflation has done to gas and grocery store. Maybe the people can't make ends meet anymore. They can fund long-term medical care or emergencies. They can use it for home improvements. They can use it. So this is a new one that I'm going to add just for fun. Somebody pointed out the other day, you can use a reverse mortgage to pay for a Roth conversion. So if you're like 59, 60, 62, somewhere in that ballpark, you can convert your IRA to a Roth. And there, again, you talk to financial planner about it. I talked to my financial planner to ask her about it, and there's some huge benefits for your children down the road. And you can use the reverse mortgage to pay the taxes on that conversion. Vacation or travel expenses. Everybody loves to travel. You can basically use this money for anything you want. It's your money. Once you get it, you do whatever you want with it. That's what it comes down to. Who would this loan be good for? Okay, anyone who wanted a home equity line of credit. So, and I hear about this, not a lot, but I do hear about people who apply for a home equity line of credit, but they just don't have the income to qualify. Now, they have a good mortgage, obviously, that they want to keep. That would be a great person. If you know somebody who's been turned down for a home equity line of credit and they're 55 and older, we might be able to get them a reverse mortgage and get them the money they want to do what they want. And then again, as they have the ability, they can pay it back down. Number 2, someone that wants to keep their low interest rate first, but would like access to extra money. Okay, makes sense. Number 3, someone who doesn't have enough equity in their home to qualify for a first reverse mortgage and can't get as much money as they would like. So this is kind of an interesting thing here. On the second reverse mortgage, they will go higher loan to values. And I'm presuming it's because they're still paying down on their first. And so they might be looking at it as an opportunity to build equity. But I'm going to show you what it looks like. It's actually pretty interesting. Okay, so here's our first scenario. We got Johnny Test Case, is what I call him. He's 64 years old. He's got a home. It's worth $1.3 million. He owes $350,000. How would that look for this guy? We've got all the variety of options here available to this guy. Now, we've got Home Safe Select 4.0. So Home Safe Select 4.0 is a regular jumbo product, but it gives them a line of credit available. Okay, so you can see on Home Safe Select, see if I've got these in the right order. If he's got on Home Safe Select, his house is worth 1.3. He's going to get $94,000 in cash. On a Home Safe regular jumbo, he's going to get $91,000. This third column is kind of an interesting one. This is a brand new product as of the last a couple of months ago. Pretty much all of the reverse mortgage lenders that offer a jumbo product are now offering this. If you have a client that has never had a reverse mortgage before, so it's not a refinance of an existing reverse, but they've never had a reverse mortgage before, they are offering this intro product. And if you look, they're going to give quite a bit more money. They'll go to a higher loan to value initially. So this person would get $143,000 compared to Home Safe regular next door, which is only $91,000. So this Home Safe intro is it is a first though, it's not a second. So, and then on the second, you can see here, on the second, they're going to give 260,000, but after the closing costs are paid, they're going to give $251,000. So you'll see that even compared to getting them a first, in most instances, they're getting more than double the amount of money available to them on a Home Safe second. So if the amount of money they receive is important to them, the Home Safe second could be a great product. I'm going to show you another scenario here just for fun. Oh, this is something else I wanted to share. I'm sorry, this kind of came up at the bottom here. The interest rate on a Home Safe second is fixed. There are only two options. You can get 4.94%, or excuse me, you can get 9.49%, or you can get 8.99%. The lower interest rate will give you access to less money. So if you looked up here, our scenario that we had a $260,000 available at 9.49. If we lowered it to 8.99, it would drop the amount of money available to $195,000. It'd save you 0.5% in interest, but it would cost you $60,000 in loan amount. So you've just got to weigh why you're getting it, which is something else we're going to go to here in a minute. Okay, that being said, this is our second option or a second scenario that I wanted to share with you. I thought this was kind of interesting. If you look at the top, my Johnny Test case, his home value dropped from 1.3 million to $900,000. All right. So you can see if I got him a Home Safe Select line of credit, he'd have to come in with money. A regular Home Safe, he'd have to come in with money. Even the intro that gives, a higher loan to value, he'd have to come in with $9,000 to get the loan. Those are all negatives. But the Home Safe second is still giving him $145,000 in cash. Again, after closing costs, he's going to get $137,000. So it is very interesting that if you have somebody who wants a reverse mortgage, but they don't seem to be able to qualify, if they're really getting it so that they can get some extra cash or put themselves in a better financial situation by having cash, this is a great option that might be available to it. The other thing, I wasn't able to verify this through FAR, but through my own devices, the maximum loan amount I've seen that they'll give on a Home Safe second is 20% of the home's value. Okay. So when I've put a $2 million loan in there, it only gives me a maximum of $400,000. Okay. When I was actually in a class with them today and I asked that question, and they indicated that it wasn't necessarily true, but every time I've put it in, that's the maximum that we've been able to get out. And it doesn't, regardless of loan to value, I put it in where the guy owns almost nothing on a first. So I'm not sure about that, but that seems to be the case. And I would go with that, just so you understand. So on this one, $900,000 loan, the biggest loan they would have been able to get anyway is about $180,000, even if they owed less money, because of that 20% rule. Also, I wanted to share with you here, how does a Home Safe compare to a line of credit? Because that's what most people are going to compare it to, right? I could get a home equity line of credit. Okay, you could. Let's see how it looks. Okay, the Home Safe second is going to be fixed while the line of credit is variable. Is that good or bad? It kind of depends on what the market's doing. Right now, I got to be honest with you, I would love a loan that's variable because chances are the next few years rates are going to drop, right? And so it's going to drop. But to be fair, if you compare it, if you look at the bottom here, most home equity lines of credit are at prime plus something. Okay. Every once in a while, you'll be able to catch them with prime minus. Those aren't really prevalent right now. I don't know of anybody that's at prime minus. And prime plus one is about, is not the best you can get, but is pretty common. If you go around to the credit unions and stuff that offer it, prime plus one is about where you're going to be sitting. So you're looking at right around 8.5% interest rate on a home equity line of credit. The Home Safe is going to be a higher interest rate. Can't do anything about that, but it does compare pretty favorably. I mean, if you're looking at 9.5 versus 8.5, but you don't have a mortgage payment or you don't have to make a payment. So anyway, going down here and comparing them. The Home Safe is fixed. A line of credit is going to be variable. With the Home Safe, you do have to take a lump sum. With the home equity line of credit, you do have some options in relationship to you can take a little bit up front and then take more as you go along. It's up to you. The other thing with the Home Safe is if you pay it back, you will owe less money, but you won't have any more money available to you on a line of credit. You're just paying it back. You're paying it down. On a home equity line of credit, at least for the first 10 years, you can draw on it. You can't do that with a Home Safe Second. However, credit score, Home Safe is knocking it out of the park. You can go down with a credit score as low as 600 and still get a Home Safe Second. With a line of credit, you'll be lucky if they'll give you one at 680. 680 is pretty generous, actually. Monthly payments, Home Safe Second, again, they knock it out of the park. No monthly payments necessary. You can make a payment. There's no penalties or anything, but you don't have to. With a home equity line of credit, you're definitely going to have to make payments. For the first 10 years, it's going to be interest only. And then for the next 15 to 20, it's going to be fully amortizing. So you're not only going to make a payment, but after 10 years, your payment's going to go up quite a bit. Minimum age, 55, 60, or 62, depends on your state. Okay, so I'm going to check on the states. I don't think it's available in every state. That was one piece of information I wasn't able to find. I do have an email out. We'll see if they responded by the time we get done here. A home equity line of credit doesn't have a minimum age. The borrower still owns the home, yes, on both counts. And repayment options. Again, it's the same as a reverse mortgage. If the borrower moves out of the house, if they don't pay their taxes or insurance, if they die, if they sell the house, the Home Safe Second is due. Okay. With a HELOC, if they die, it's not necessarily due. Their heirs can pay it, but if they move out of the house, or not if they move out, if they sell the house, obviously it's going to be due. If you don't pay your taxes, then the government will take your house. You don't have to worry about the HELOC doing it. Anyway, that gives you some idea of how these compare and what they look like. This is my contact information. Again, I am in California. You're welcome to contact me if you have questions, but to be fair, I want to be your guy, but your local loan officer, especially if you're out of California and in a different state, they should know about this product. FAR is they're the big dog in the room or whatever. They are the biggest reverse mortgage lender. So there's a good chance that whoever you use for reverse mortgage lender is going to know who FAR is and what their product offering is. But you're welcome to contact me if you have any questions. That being said, please, come off mute or whatever. And if you've got any questions, feel free to ask.
Shelley, you can ask your question.
Okay, here we go. Yeah,
Go
so I
ahead.
was wondering, if you have a second mortgage on the house, can you use this, trade it in for, like say it's high interest or whatever? Can you use this loan, this reverse mortgage to pay off that second mortgage?
Yes, ma'am, you can. You can't get a third. They're not going to give you a third, but you can use this reverse mortgage. There, of course, has to be, enough equity in the home. It has to work and whatever, but you can definitely use this mortgage to pay off an existing second mortgage or any credit card debt or anything else. Yes. Any other questions from anybody else?
So who would be the ideal homeowners for us to be looking for that might want to utilize this product?
Well, it's kind of like I was, giving you here a little on a previous screen. We could probably come up some more if we brainstorm together, but what it comes down to is, hold on, previous. It comes down to this, again, A big one for me is if you know somebody who wants a line of credit or thought they could get a line of credit and they were turned down, or needs money for improvements, they're okay with, again, if they have a fabulous first, I mean, hey, I got people, there are people, I got interest rates, 3 or 4 years ago, I got them 2.5%. Those people hold on to them. I think they like their mortgage more than they like their children, you know? And so they just don't want to let those things go. They would be a great candidate for a reverse mortgage second, if they wanted to use the money for something, and really what you can use it for is up to you.
So if they apply for a HELOC and got turned down because of income limits, and it seemed to me that the income limits or the income requirements for this Home Safe Second were more substantial.
So the income requirements for this Home Safe Second aren't more substantial. They're actually pretty lenient. You got to remember, when they apply for a home equity line of credit and they get turned down, they might be getting turned down because the home equity line of credit was adding debt that the bank was figuring that they would have to pay, that they won't have to pay when they get a reverse, right? And so
Right.
there's extra debt being added on there. But
Okay.
it is important to note, just as you said, that it's not the same as qualifying for a regular reverse. Because with regular reverse, we're getting rid of that mortgage payment entirely.
Right.
With this, we're not adding any debt to you, but we're not getting rid of any debt either, unless we're paying off credit card debt. Also, I did see somebody had their hand raised. If you can.
Roni, Roni, you have a question?
Yeah, I do. In terms of lien status, so this is not primary. What exactly is it? Secondary, third? What exactly is the position of that mortgage?
Well, again, this is a home. It's a second Home Safe Second. It's a second mortgage. So you're going to retain your first mortgage with Bank of America, Wells Fargo, whoever it is you've got, is your servicer. That's all going to stay the same. This is going to be added as a second mortgage, just like any second mortgage you would get.
But what if you already had another reverse?
So are you telling me you own it free and clear?
No, it's just a question.
Oh, I didn't understand the question though. That's why I'm asking.
Oh, so I'm a little confused. So this is called reverse too, correct?
This is a reverse mortgage, yes.
Okay, so so you can only have one reverse mortgage, because I was a little confused in terms of
That is correct. So if you've already got a reverse mortgage that's a first mortgage, you cannot get a reverse mortgage that's a second mortgage.
Okay.
This reverse mortgage is really on top of a conventional first mortgage, not on top of a reverse second.
Okay, that's why I was confused. Thank you.
No problem. Any other questions? Yes.
Shelley.
So I'm a little confused about, when do you pay this off? I mean, so you're not making payments on it, but when the loan people have to make money. So when do you pay it off, or how do you when is it due?
It's due when you move out, just exactly like a regular reverse. It's due when you move out of the house. It's due when you sell the house. It's due when you die. It's due if you stop paying your property taxes and you stop paying your insurance. Then the loan is going to be due, because they'll start foreclosing on you, because if they don't, the state will.
And maintenance upkeep.
So, and
Yes.
if it's longer than 10 years, that's when the interest comes in. I mean, you don't make
No,
any
it's
payments.
not. Again, that's only for a HELOC. This loan does not have a term.
Okay.
This loan is as good. Loan is good for you as long as you are alive and live in the house.
Okay, but there's no payments to be made, and they just wait. The bank, there's no payments to be made even if you're there in 10 years. You're just not making any payments on it as long as you own the home.
That is exactly right. And
Yes.
there are no payments. If you live to be 150 years old, you can stay in this home and you can keep this loan, and you don't owe any money on it until you pass away or sell the house.
Clear. And then, I'm sorry, one more. And then at that, when you pass away or sell a house, then that's when you pay that 8.9%.
That's right. So you're going to pay what you borrowed plus
Right.
any interest that's accrued during the entire time that you had the loan. Yes.
Right. That's clear. Thank you.
You're welcome.
And is simple interest or?
No, I doubt it.
Mm,
It's probably
compound.
compound interest. Nadia, do you have a question?
Yes, hi David. Thanks for the
Hello.
information. Two questions. The first one, is this something that is different? Because I know a family who did reverse mortgage and after 10 years they had to pay it off. What you're saying is completely reverse of that.
Okay.
Is
Well,
this something
let's talk
different?
about that for a minute, because how long ago was this that how long ago did this happen, or this 10-year
This
thing?
was about, I would say, maybe less than 10 years, so 7 to 10 years ago.
Okay. Well, I mean, loans were different a while back, but even 10 years ago, if they had a reverse mortgage, there's no term on it on a reverse mortgage, whether it's a first or a second or whatever you want to call it. There is no term on a reverse mortgage. So unless the circumstances were somehow different than you describe it, there's no reason that after 10 years they should have had to sell or get out of the house. Like I said, the only point at which they should have to sell or move or whatever is if somebody dies, or again, they sell the home. There's unless they don't pay the property taxes, there's no reason at all that they should be forced out of that house. They can live there till they're 150 years old if they want to, and there is no mortgage payment due, regardless of whether it's a jumbo or a HECM.
Okay, and then my second question is, what if the husband dies and the wife is alive?
Then that's actually a protection that they just added, because there was a period of time where, if the people couldn't get enough money, they'd say, well, the husband's older, we'll just get the loan in his name. Okay. They added that protection probably about 5 years ago or so. They added protection where if you get a loan and you're married and both people are in the house, then you have to take into account the age of both people, regardless of whether the other person is on the loan or not. So they'd have to take into account the wife's age. And if the husband died, even if she was not on title to the home, she is entitled to stay and live in that house until she passes away. The loan is not due until she passes away. Not as long as, again, if they're married, they take that into account. So they have spousal protection now. That's
Well,
built in.
wouldn't she have to be on the title too?
She doesn't have to be on the title. I mean, it's preferred, and I mean, I would encourage my clients to add them to title, but she doesn't have to be on title. They just have to state that she lives in the home and they're married.
Well, if the husband dies and she's not on title, who owns the home?
Good question. It probably gets inherited by her, I would think. I mean, it depends on a lot of people in that situation, they have a trust and it automatically reverts to the wife. So again, that's more of a title company question. I can't answer that, but I can tell you there are protections for married spouses.
I was always under the impression that they had to be on title in order to have the reverse loan. So you're saying that's not the case.
I mean, I will double check, but I'm
Yes,
pretty
David,
sure.
but that changed, as David said, it changed in a few years ago. The wife's protected, whether the spouse, I shouldn't say wife, that could be the other way, but the spouse is protected, whether it's on title or not.
There you go. Which is exactly what I was talking about. So, all right. Somebody had a question. I thought it was somebody had a question.
I did. I'm
Okay.
Nicola. I had three. And
Okay.
the first one, I wanted to go back a little bit when you were talking about that's reverse second. And did I understand that you said it's like segregated to the primary loan when they do
Yes.
oh my goodness.
Yes, there is a second. Again, this is a pretty new product. It's only a little over a year old. It's so it's not that well known. There's a second mortgage you can get that's a reverse, and it is they will leave the first in place. As I said in the presentation, the people have to be able to qualify for the payment on the first, which, when you get a regular mortgage, you get rid of the first, and so that's not an issue. But as long as they've got income to qualify, we can get them a second reverse.
But are you saying that, correct me if I'm wrong, it's segregated to the first?
Yes.
Oh, how does a lender like that, the primary lender?
You know
That's a
what?
huge
As the
one.
primary lender, they don't care because they're in first position, and if they have to foreclose on the house, they're going to get paid first. So as far as the primary lender, not only do they not care, but they don't have a say.
Okay, but it sounded to me like the second was in first position, not the
No.
primary.
No, the second is not in first position. The first always, I mean, when it comes to mortgages, it really has to do with who got in line first. That's the way I look at it. You know, the first mortgage, they were standing in line first. They get their money first. Now,
Okay.
if the first mortgage agrees to move back one space, you know, then somebody can jump in front of them. But generally speaking, they don't agree to that. They want to be in first position.
Okay,
So,
that's what I want to make clear on that one. And the
yeah.
other one was does Lisa apply? Those people, our credit does not apply on this.
Credit does apply in this one. Again, you can see with a first reverse, credit is not as big a deal. I mean, you can be in foreclosure and a bunch of other stuff, but with a second reverse, credit does apply. They have a minimum credit score of 600, and you can't be late on your first mortgage. They won't give you the loan.
Mm. But that Lisa's that set aside part, that's what I was referring
Yeah,
to.
as
When
far as
people-
I know, there is no Lisa option for a second second reverse. There's no
Okay.
Lisa option. That's not an option.
Okay, and the last one was from the beginning, you were saying that the interest rates may be going down. I know you don't have a crystal ball, but I'm not a great fan of reverses right now because of the interest rates. But if there was a projection on your part or your company's part of what would be an ideal situation to investigate going into a reverse sometime in the future when the interest rates might be more favorable.
So a couple of comments on interest rates, and this is interest rates in general. I mean, reverse mortgages their interest rates go down when regular interest rates go down. You know, they all kind of go together. The overall economic outlook, if you look, I mean, even the Federal Reserve has said they're still planning on cutting the interest rate a couple of times this year. Don't hold your breath on that one, but that's what they're saying, right? The overall economic outlook is that interest rates will be dropping. How long is that going to happen, or how long will that take? It might be a year or two or three, but it will get there. It's just going to be very slow. Now,
Mhm.
I always couch my economic advice with this comment. An economist is the only job you can have where you can be wrong more than 50% of the time and still be called a professional. So I'm not even an economist, so take that into account. But the overall outlook is that's where it's going. Now, as far as reverse and waiting for interest rates to drop, one thing I will say, now again, with reverse second, which is what we're talking about today, it might be a slightly different animal because it is a fixed rate product. But when it comes to reverse mortgages in general, 90+% of the clients that I work with and 90% plus of the clients that you are going to work with and are going to have are going to get a HECM monthly cap 5. What does that mean? They're going to get a FHA HECM home equity conversion mortgage first. It's going to cap at 5%, and it's going to have a line of credit associated with it, and it's going to be an adjustable rate mortgage anyway. And so if rates go down, they're going to adjust down. And frankly, that's what 90% of people that get mortgages get that product.
Hmm.
Okay.
So that they can get that now?
They can get that now, and as interest rates go down, their interest rate will drop. So if you know somebody who could benefit by a reverse mortgage, there is no reason for them to wait, because chances are the mortgage they're going to get the interest rates will drop as the interest rates drop anyway.
Okay, very good. Thank you.
And
You're
you can refinance. Can you refinance this jumbo second?
Oh yeah. I mean, there's no prepayment penalty on all this stuff. Regular reverse and other, you can always refinance. Now,
Yeah.
whether it's worth your while and whether or not you have the equity in your home to refinance, that's a whole nother story.
Right.
If
Jessica,
I
did you have
can-
a question?
Yeah, if I can chime in talking about interest rate, a lot of you are not thinking about the same thing. This is not a traditional mortgage. On a reverse mortgage, as a matter of fact, it's 95, 98% of them are adjustable because the fixed rate is not to your advantage. Most people are afraid of adjustable because when the interest rate goes up, you have to make more payment. That's why you're in trouble. But in a reverse mortgage, since mortgage payment is optional, So you don't have to worry about to come up the money because the interest rate are different. Because the HECM now, there's a 5% cap. Well, unless you can the 10 cap, but majority of them are 5% cap. So you always have a cap anyway. If you're really looking at the interest rate for the last 40 years, adjustable rate outperform fixed rate. You guys might not know that, but you can check on that. So because of that, you got the flexibility of that. There's no reason to wait for interest rate to change to get the HECM. If you have a need, this is the time to do that. Then you do that because you're not waiting, because you're going to get an adjustable anyway, because 98% of the mortgages out there, the HECM loan are adjustable. So that's my 2 cents worth of that.
Okay, did
So
you?
David,
Yes.
oh, go ahead, go ahead.
No, did you have a question? I was going to ask if anybody had questions.
So, if we're talking to homeowners, what kind of an equity spread should we be looking for if we're gonna think about maybe this is an option?
Well, again, it's kind of interesting because I thought it was interesting that you don't have to have as much equity in your home to get a reverse second as you do to get a reverse first. It's kind of like that slide I showed you when I was doing the PowerPoint presentation.
Yeah,
I apologize, my camera keeps cutting out. So
no worries.
if you don't see my face, maybe that's a good thing, but I'm still here.
There's still, you're still
Anyway,
there.
that being said, it's interesting that with a reverse second, they will go to a higher loan to value. So if you have a client for some reason has tried to get a reverse mortgage and they were not able to get it, and they're really interested in cash out. Again, if they want to get rid of their mortgage payment, getting a second is not going to do it. They're still going to have their first, right? But if they were trying to get cash out and for some reason they can't, or couldn't, it may be the reverse second would be the solution for them and offer them the cash that they need to do what they want to do. So it really is not it's an interesting option. If we go back to, let's see, I'm going to share here. Let's see if I can share my screen with you. If we go back to this particular slide, scroll down. If we go to this slide here as an example, and we're going to go from current, whoops. Let's see, one more slide. If we go to this slide, again, the reason I did this slide is because you can see that all the other products available to this person were not available realistically. They would have had to come in with money to close. You can see available funds are all negative at the bottom here. But the reverse second, not only was funds available, but there was $137,000 available, right? So it will go to a higher loan to value. So if you've got a client who maybe, again, it's not going to be super high. It is a reverse mortgage. They're still going to want you to have a lot of equity in the property. But if you've got somebody for whatever reason couldn't get a regular reverse and they are looking for cash, this might be a way to resolve that.
Good, thank you.
Welcome. Anybody else? Any other questions? You guys are great. I mean, I'll put my contact information in the chat, but if you have questions, again, I encourage you to, I encourage you to use your local reverse mortgage specialist, whatever area you're in. Again, I can do all of California. I'll put a pitch in for that. Other than that, you're welcome to call me whether I'm in your area or not to ask me questions, because I'm happy to help. I mean, there's enough business for all of us, and I would love to do whatever I can to further your goals there.
So, and one thing to point out that you had mentioned earlier is that this product, this is a one-off product. Like, it's only offered like this one specific product, but
yeah,
can,
it's only offered by one lender. It's offered by a lot of, if you're a reverse mortgage person, you probably can offer it, right? But the parent company is FAR. They're the only company that offers this product. There's not multiple reverse mortgage companies out there that offer this product.
so
Okay.
So does everybody, I mean, all of our reverse mortgage service providers, can they use this product?
I would think so. I'm sure Joseph probably could chime in too. He probably can use it, but any reverse mortgage
Okay.
lender that you work with that uses FAR as one of their outlets should be able to use this product. Joseph, you got this product, right?
Yeah, the source are the same. When your HECM is the same Fannie Mae product, anybody had the same guideline, everything. The lender's no different. That particular one is proprietary product. All of us are going to the same lender anyway. So it's
Yeah, but
different.
you have FAR as an outlet, right? You can use FAR.
Yes.
Okay, so see, Joseph has it too.
And Jess, you guys should have it at Luminate.
I don't know. I mean, I just kind of, we do have a division. To be clear, Mark, we're just getting ramped up on that, but we actually partner with people outside of our organization, mostly with the reverse mortgages.
Well, so that's what's interesting because, you know, this isn't we're all affiliate providers. And so this is a singular product that we're learning about. And then if we have, so
It doesn't matter
say
what
I
you
learned about it. Yeah. And then I
Yeah.
go to Joe and I go,
It
Joe,
doesn't
so what
matter
do you
what
do?
you call it. A different lender may call it different. The second reverse is only have it recently. You know, it hasn't been around for a long time because it's not a Fannie Mae a product. It's proprietary product from a lender. They come up that recently.
Amazing though. Amazing to learn. Amazing to know. Does anybody have any more questions? Any ideas? Any ahas?
Yes. This is a great segue, Julie, to what I had sent you about the back to school for seniors and their adult children with ADUs. Rebecca Muller, who's been a presenter before, we're
Yeah.
doing the loan packages and we're going to be talking about reverses to do the financing part and add income, not only property values, but also add income to offset any costs associated with doing a reverse. So it's going to be Saturday, June the 28th from 10 to 12 online. And Julie has the, I sent you the link as well as the flyer.
So I'll send the flyer out to everybody. Hi,
And it
Lisa.
has-
Lisa, do you have a question? Lisa went to the refrigerator. Hi, Mike.
I just muted. Okay, sorry.
There
I
you
thought
are.
I was unmuting. Yeah, sorry. No, I just actually talked to my guy here about the reverse mortgage buyback which was really interesting. Did you guys discuss that? Because I just came on late, so.
Didn't talk about that. Go ahead, tell us about it.
I'm not the expert. Yeah, I'll let you talk about it.
No, I mean, honestly, I'm not sure I even know what you're talking about. The reverse mortgage buyback? What's that?
Oh, I don't know if it's just an idea or just part of the way he explained it was, so you have a couple that's like 85 years old. They have nice equity in their home. They're not planning on passing their, home down to their kids. They got enough money or whatever. And they want to downsize. So they say their home's worth like 800,000. And then they decide to do a reverse mortgage buyback. Which is basically they sell the home, and I don't know if that's what it's called officially, but sell the home. Maybe it costs them, they have 100,000 in mortgage, and maybe it costs them say 50,000 to sell it. So they got about 650 out of it, and they find a house at say 700,000, and they put down like say 400,000, and they take out 250,000. This is just an example, and they can use that to invest or take vacations or whatever they want to do, I guess. And it just works like it's just a reverse mortgage, but
So it sounds to me like all you're doing is selling your home with a reverse mortgage, paying off the reverse mortgage, and buying the new home with the reverse mortgage. Does that sound right?
selling your home. No, the home does not have your current home. If they didn't have a reverse mortgage, this is just
they didn't have a
what are you
reverse
doing back
using a
here?
reverse
I
mortgage.
thought you were
financing.
Mr. Gilroy. What
Yes.
brings, are you at Gilroy now, or are you still here?
Hey,
Seb,
hey,
you got to mute
excuse-
yourself, buddy.
There you go.
There you go.
No, it's not. It's just using a reverse mortgage instead of a conventional mortgage
So you're
Because
just talking
that
about
way you can-
reverse, you're talking about reverse for purchase then?
For purchase. Is
Yeah.
that what I said?
You said
I
buyback.
say
You
something
talked
else. I am
something
so
about a
sorry. Reverse
buyback.
for purchase. No, you're
Yeah.
right. I said the wrong word. See, I got screwed up.
Yeah, you can, reverse for
purchase.
purchase has been out there for a long time, and you can. I think in 2016 was when they started, or maybe it was a little earlier than that. Was when they started reverse for purchase. I have to look up my timeline, but it's been out
Yeah,
there for a while now. You can definitely use a reverse to purchase a home if you wanted to.
Yeah, and I just found out about it. That's all I'm saying. It's just,
Yeah,
and
When
I said it
tell-
wrong, so I do apologize. Of course.
No, it's okay. When I talk to realtors and they say, "Did you know you could use a reverse to purchase a home?" There's still about 70% of them that don't know it. So I get it.
Yeah, well, I was one of them.
Okay.
But I'm getting educated, so
Any other
I haven't been
questions
in
or
it that long.
comments? Yeah.
Awesome. Good stuff to know. Does anybody have any clients or prospects come to mind with this new information? Or maybe how to market for some prospects? Well, you think about it.
That's why I was doing the workshop. I do have somebody
Yeah.
gotten approved already for a 750 square foot ADU on her lot. So her deal was, and we don't know about the financing yet. I don't get into that, but using the ADU for herself, her husband, and her son to move into, and renting out the home, the primary home, for income to offset any costs and have value added as well. So the
Yeah.
reverse might work for her. I don't know yet.
No, but it's good to get the idea, and then now we have the resources to crunch all these numbers so that our homeowners can make their best decision.
Correct.
So,
And just to having all this information in their toolkit, they don't have to use it right now, but certainly planning for the future. That's why I'm asking the interest rate questions. Nobody knows what it's going to be. Nobody knows if we'll be here in 2 or 3 years, whatever. But at the same time, if they have these tools they can refer to when the time comes.
yeah, definitely. Definitely. Good stuff. Good stuff. All right, David, thank you so much.
Hey, thank you guys for having me. It was very kind. I hope the information was useful. And if there's anything I can do, like I said, just you feel free to contact me personally if you like.
Very
Great.
useful,
Thank
very
you.
useful. Everybody start to think about maybe do some marketing ideas, some farming ideas, reach out to David. His information's in the bulletin. I'll have it in there next week as well. And we are recording today, so so if anybody's got anything else, I wanted to mention that I made mention in the bulletin this week. I'm forming a new group called the Market Makers. We're going to meet one time a month, and we're going to talk about all things marketing, co-branding, create marketing campaigns, and collaborating on all that. So if anybody's interested, just review it in the bulletin. Give me a text or an email. We're going to get started on that in July.
Is the website going to come with it?
A website?
Remember, I got you.
You be
Website.
quiet. You be quiet.
Don't get me started. Website.
Oh, you be quiet, Mickelin. No, but we will be building landing pages because that's
Okay,
part of
that's a start.
marketing campaigns. Yeah.
Okay, that's a start.
Yeah, totally. Building landing pages.
And next week we have
We have
Unlock.
Unlock next week.
Unlock, which is the other PACE program in our area besides Wellbe Health.
Hmm.
So that'll be good. And they got an
Hey,
interesting history too.
Hey, Skip, is your next SRES class in August?
August 13th and 14th. Yeah.
No, I won't be able to attend that, but I'm hoping there'll be another one. I was hoping to attend the in-person one with you, Julie, but I guess I can't because I'm not a
Well,
member.
SCORE is having one the week before mine. It's
Yeah,
a
I
live
sent you the dates on that, Lisa.
Did you? Because I don't know if I got if I got it at my new address. Email
Yeah,
address.
no, well, I replied, but I sent you the dates and then we can go over, so what is it? The August 6th and 7th is SCORE. And so are you available those days?
I'll let you know. I don't want to take up people's time, but I'll let you know.
So we'll, yeah,
Um,
yeah, definitely.
I have to find your reply because I can't find it, so
Yeah.
I'll figure that out.
That's all right.
All right.
That's all right. We'll
Thank you,
figure it
Guido.
out.
And I'm not sure, but I don't think Score is offering the retake for $99. Maybe I might be wrong, but you might want to check with them for that.
Well, Jody and I are going to talk about that next week when after she gets back from vacation.
She's back now.
Oh, she is
Still
back.
in- remember the general meetings on Thursday,
Oh,
membership meeting.
that's true. All right. So we have other things coming up as well. The Real Estate Advocate Alliance organization, with their names are Skip. Do you remember their names? Trish?
Not without looking them up.
Yeah.
Let me see here. Yeah, Trisha Parks. I can't read my writing. And Wayne Bell.
Yeah.
And that's going to be an interesting session. I think we're all going to learn a lot from that.
And that's a national discussion actually in nature, but they are from California and they do represent us as real estate professionals in the state of California. They're in it's almost the actual lobby business right now. So super interesting and super pertinent to what's going on right now with stuff.
And that's the week after Unlock, 2 weeks
Yeah.
from now.
You know, if you guys have any subjects or organizations, anything that you'd like to talk about, anything that you want to contribute, just let me know. Just let us know because we can work it in. One of the other things too about the market makers group that I'm forming for marketing, if anybody has any marketing ideas and needs marketing support, brainstorming, collaborating, we're going to do that one time a month. And if you think about it, you can let me know. Go, hey, Julie, let's do this. Hey, Julie, let's do that. So, or let's talk about this, or let's talk about that.
Hey, Julie, let's get a website.
I know I'm working on it. I'm working on it. Okay.
And if anybody is interested, the deadline for the CSA Service to Senior Awards is the end of the month. So you got about a week left.
So, oh, Seb, I'm gonna say Seb.
Yeah,
Seb
Seb's a
got his
CSA now.
CSA.
I don't have my CSA yet because they have not completed my background check. You know, they told me today
Well,
they're looking in Mississippi. I owned 2 properties in Mississippi. I went there one time like 13 years ago for 3 days, and I never managed the properties personally, but somehow they have to complete a background check in Mississippi.
But it's
So-
okay with the Manx you robbed, though. Is that all right?
I guess. Anyway, so I'm not, they told me it's going
Bad
to be like
checks.
4 or 5 more days really before they approve me because the Mississippi takes
Bummer.
forever. Can you believe that? I'm shocked, but I mean,
Weird.
at least they're doing a thorough
Weird.
background check, right? I mean, that's good, right?
Yeah, I guess.
All right, well, the big deal is that you pass the exam and you're a CSA.
And well, I will be as soon as they bless me, but
How
yes.
exciting.
And I'm very interested in your marketing group, Julie, so I'll be talking to you about that.
Okay, perfect. Awesome. And this is going to be for everybody. This is for those of us that are CSAs, senior home coaches, and SRES. This is all of us that work together to bring services to the senior homeowner and the families of senior homeowners. So not just real estate. It takes a team to serve this homeowner and our clients, including Carol Sue.
Where can I find a CSA in Sacramento area?
Oh,
Go
Lisa.
to the website,
Yeah, on the website, the society.
CSA.us,
Yeah.
and there's a place you can find a CSA, and then you just fill in the blanks and you'll get that.
Yeah.
Okay, thanks.
And Lisa, when you look on that website as well, take a look and see if maybe you would like to become a CSA.
I doubt I have the time.
I know it's a commitment, but it's really, really, really a good thing for us to do in our business now.
Well, if you're gonna focus on working with seniors, it's almost a requirement. I mean, you know, the information you get is vital. It's not just nice to know stuff, but it's things that can help your business and keep you out of trouble, and you know, it's
It-
well worth it. So
Is this a business in
find
its
the
own?
time. I mean, we all have 24 hours a day, but you know, you can spend them however you choose, and you know, the CSA is that important, I think.
Are they mainly realtors that are CSAs, or
No, it's everything, everybody in the senior business. They have
if I could find
all
a
kinds of
CSA,
people.
Oh,
if I could find a CSA that's an at-home or what do they call it?
Yes, that's a really good idea,
Okay.
Lisa, because you can
I
find
need to find
a
someone for my
local,
networking group.
yeah, a
Yeah.
local CSA and collaborate with that person in your market. And for you're in the Sacramento market, JD's in the Sacramento market. We have he's not a CSA yet, might consider it. So, but yes, that's one thing that we like to foster for sure. Cause again, it is a team effort. So
Julie,
yeah, go ahead.
I just want to add to that because I partnered with Nicole Mello because I felt very inadequate for the type of client that I had who is now in abortion care. And matter of fact, I've been in contact with her daughter back and forth almost every day. Because she has more skills and she knew about all these different, and she was already turned down by one of the retirement communities because she didn't qualify because of her health. So, I mean, it was more than I could take on. It was more than her daughter could take on. And that's what Nicole does. So,
Yep.
and she's a CSA. So,
Mm-hmm.
refer
Yep.
it on.
Nikel's amazing.
Mm-hmm.
All righty. Carol Sue, yes, go ahead.
Oh, great. Thank you, Julie. Hi, everybody. I just want to remind you all that there is an additional way that seniors can get money, of course, if they qualify. So when a reverse mortgage, or in this case, a second reverse, is not possible, if they have a life insurance policy they no longer need or want, or if it becomes too unaffordable, I might be able to sell it for them on the secondary market to get them the cash that they need. There are no income requirements. They don't have to pay it back. There's no interest on it. They literally, just like a reverse mortgage, Matt deals with getting assets from a home. I'm doing the same thing with a life insurance policy, which is legally personal property since 1911. This is completely regulated. I was issued the very first license in the country to do this back in 1994. And I'm one of the people that literally created today's marketplace and the forms, and I've worked with regulators. So I have a deeper understanding than many other people in my industry, because the majority of them honestly are on the investor side. For example, you may see television ads now that,
Yes, we do.
right? Here's the thing about that, Julie. Those ads are put out by companies that are licensed to be called providers. Those are the companies that actually buy the policies. They represent their investors.
Right.
Okay. So their job is to pay as little as possible, but still make the policy seller happy.
Yeah. So we're going to go into that really in depth when you do your presentation on
Great,
July
'cause that's
29th.
exactly what I was
Yeah.
thinking of. Spell it all out.
Yeah.
You understand, you don't go to these companies direct. I will actually go to all of them for you. And
Yes.
then I create an auction for it.
Yes.
But I
Exactly.
will describe where they get their money from. What is the difference between different types of providers, different types of brokers? So I'll do that. But for now, please just remember, when all else fails, Dave in particular, if you can't get that reverse second, please find out if they have a life insurance policy, because that might be something that can provide them a better benefit for where their life is right now.
And
Before
by the way, Carol did a presentation already for us on 10/29 of last year. And if we had a website, that would be where you would find it. However, if you don't have a
wow.
website, you can contact me and I can send you the recording from that session that she did.
Well, we do
I
have
would like it.
we have a YouTube channel. They're all on the YouTube channel, Skip.
Oh, I didn't know that. That's
Well,
great.
how are
I
you
will do
going to
that.
find it?
And of course, anybody can contact me directly. I love talking about this stuff. I have no life otherwise. It's what I do. But I really think it's important that everybody at least understands the basics of this, know that it's an option, and then stash it away until the time shows up that it might come in handy. But when you're in the middle of anxiety and needing money and you don't know any better, that's when somebody picks up the gold mine call. You know, you call the wrong people, and if you only call the one company that's advertising, they know it. They have no competition. They do not have to pay as much as I know they could. And that's really why I'm in this. I want to make sure the individuals get as much money as possible. I don't care about the investors. That's not my problem.
Yeah, we're here to work with the senior homeowners and the families of the senior homeowners, and
Exactly.
not on behalf of the investors
Exactly.
or the providers. And
Right.
that's in several industries that we deal with.
Yeah. And
So, yeah,
I don't think the consumer is always aware of those distinctions.
no, they're not.
And it's
they're
very
not.
difficult. And life insurance in particular, as soon as I say life insurance, I see their eyes glaze over. People don't want to talk about life insurance. I think a lot of them think I'm about to sell them, which is not it. I want to help them learn how they can get money from that policy they've already been sold. They're paying for it. Did you know that you might be able to get money back instead of just lapsing it, which 8 out of 10 people do? The life companies do not pay off if people lapse their policies, and that's what 80% of all policy owners in this country do. When I started this, it was 90%. So we're making a dent, but it's not quite deep enough yet.
So John, what do you think about all that? Do you know, are you aware of that statistic about letting people's, because you work as a financial fiduciary, and people just let their life insurance lapse. They just let it go when they didn't, there is a value to it. They just didn't know.
Well, so far that hasn't been, an item of conversation with my clients. So I would like to learn more from Carol, and I will be back from vacation on the 29th.
I would love to talk to you about it.
I have my own little life insurance term policy, and it'll expire in about 4 years.
That's perfect
don't know.
timing.
You think it still has some value?
Well, there's a criteria that there are qualifications, although it's very different from getting a mortgage. It goes to life and health and age, and then we look at the policy face value versus the premiums. So there is a bigger picture here, but in a nutshell, these providers that buy the policies, they're looking for a certain life expectancy of the individual. So that's the first criteria. I need to make sure that somebody might qualify, because I don't know. I'm not a doctor, but I certainly know enough that I can have an initial conversation, ask a few basic questions, and then know if it's worth looking at or not.
Yeah.
And if it's
Well-
not worth looking at, then I try to always give them some other things to consider.
Yeah.
Well,
But
not to
it's-
cut you off, but
Okay.
we can do all that on the 29th.
Yeah.
And it'll be up for grabs then. So anybody
Okay, good.
have anything else for?
Roni, you had a question?
Yeah, I had a question for her. Do you guys have a brochure on that topic she's talking about? I actually have a meeting tomorrow with about like 20 seniors at a church, and this might definitely be something that might be of interest to them. I know I wasn't here last year, I wasn't part of the group, so or maybe if you had like the YouTube video that you could send me, that might be helpful to me.
Is that for me or for
For-
Julie?
Yes, it was for you.
No, I don't have a YouTube video. It never even occurred to me to do one, but I thank you for that idea. I'll definitely look into that. But I'm happy to speak with you. And I have a couple of things I can send you, not that I wrote, but that real journalists wrote after looking into this.
Okay.
And what that will do is, of course, obviously show you that I'm totally legitimate and I know what I speak of, but also it'll give you some ideas of how it actually worked. And that should be enough for you to wrap your head around the concept. I
That
can
is perfect.
also be available to you anytime. I'm very reachable.
All right, so what I'll
Roni,
do,
I could send you an email with all of her contact information and then a link to the video from her presentation in last year.
Thank you, Julie.
Yeah.
thank you.
So, all righty. Good conversation, good subject matter. Thanks, you guys.
Okay, and contact me, Roni.
Will do. I will. Trust
Okay,
me.
good.
And have fun with your group tomorrow. That's
Yeah,
gonna
really.
be amazing. Yeah. And Mickelin too. Okay, and I'll send Mickelin stuff out and then we'll just see everybody next week.
Appreciate it.
Can I give
Thank
you a
you,
call,
Julie.
Julie? Do you have a minute?
Hi, Mickelin.
Yeah, go ahead. Go ahead.
I'll give you a call.
Bye-bye. And Julie, thank you for the information. I'm using it, so I'll talk to you about that later.
Oh yeah, perfect, Shelley.
All right, thanks. Bye.
Yay!
I'll call you, Shelley,
hello.
and
Okay.
Carolyn. I'll call you ladies
All right, bye-bye.
afterwards. Thanks. Great.
Bye. Thank you so much. This is such a great group.
Thank
And
you,
even
Carol.
have me thinking now about getting my real estate license again.
Oh, Carol, we'll talk. I can help you out with that. I'll
I'm
help
not
you out
ready
with
to go
that.
back to school, but
It's
I miss being in it. And this has brought all of that. Real estate was my first career, as you know.
well, you know,
The
and
other,
we're morphing. This is what we're doing is not just real estate.
right,
It's not-
exactly.
It's completely,
Much
it's
bigger and better.
it's a new industry completely. Seniors real estate, completely new industry, what we're creating here.
And I'd like to attach, I have to redo my own vintage website. And when I do, I definitely want to have more external links, and you would be the first one.
Perfect.
Okay.
I think
so-
Lisa, did you say you had a question?
Yeah, I'm just going to give you a call.
Yeah, we'll talk.
Okay.
We call. Okay, and
All right.
Seb, we'll talk. Everybody
Thank
will talk.
you.
I'm so excited.
Thanks, Julie.
Bye,
Okay.
everybody. Thank you. Have a
All right, you
wonderful
guys, have a
day.
great week.
Bye.
Nice to
Bye.
meet you, Carolyn. Thank you for joining us. Hope to see you again. Send us an email. We'll get you all hooked up.
Thank you for